on the show right now and figure out what he made of the trading day yesterday. And for Kunal, morning firstly, for the better part yesterday, it was quite the listless market.
Yeah, it's quite a listless market, but then two parts to it. One, we started off on a negative note because of that 120 points downtick on the gift nifty, but then we ended on a very flattish note, and that was more of a recovery for the broader markets. We saw good large cap names making a comeback. The best sector performer in the last 4-5 days of this market recovery is the metal index and the commodities. So that I think is, and you saw many of the stocks seeing a follow through price action. So names like Tata Steel, for example, from 165 thereabouts, I think has seen a recovery of almost 7-8%. You've seen Vedanta moving up higher to a strong zone, Hindalco, Jindal Steel, etc. So that sector is looking quite strong, vibrant. You have recovery which has come across from the other auto names, large cap auto stocks. We've seen recovery for Maruti, etc. IT stocks have done reasonably well. So that sector is the number of sectors which are trying to participate. That's opening up for the markets, and I think that's a positive sign. And net, I think I've been maintaining this, that if we hold that 26,000 mark and the market breadth keeps on improving, that's actually a very good sign. It tells you that the markets are now getting up or getting ready for a second round of a breakout or an up move.
And
It's
it
just that
seems like, sorry, yeah, go ahead.
It's just that right now we are in that zone where the global markets are not playing a very strong support factor for us, which was the case maybe the last 2-3 months. But then we were going through our internal consolidation. Now, when we are ready for a breakout in that sense, in terms of market internals, the global markets have taken a back seat.
It seems like the broader market is opening up. I mean, look at Amber, Dixon, Idea, KPI Tech, BSC. The underlying momentum seems to be building up somewhat.
In fact, I just calculated the last 10 days of the top 10 traded stocks. And you would not believe that names like Reliance, etc., they come in 6th or 7th. So you have names like Keynes, Shakti Pump, etc. We were discussing this point yesterday also, that there are those odd mid-cap names which are not the higher traded volumes stocks. So that tells you that the markets are concentrated or getting concentrated into very specific names depending on the recovery or the risk reward for these stocks. And they're not too much focused on trading on the larger cap names.
If you look at the volumes also, yesterday the volumes were a little tepid. We didn't see a normal, average volume coming into the market as well. And as a result of which, as you said, the frontline stocks didn't have high daily delivery value as well. You had Indigo and Corona on the top of delivery charts. Okay. Then you have a Geojit coming into play because the stock was up 7.5% odd and good delivery happening there. Then Hindustan Zinc, BSC, Vedanta. These are some of the stocks which were buzzing yesterday. What is your view on some of these stocks? Especially with respect to a Geojit or a Hindustan Zinc or a BSC?
See, I think Hindustan Zinc is a classical case because of the silver rally what we've seen, and this was pending for the stock since I would say last 11 months. Compared to asset classes, gold in that sense, Muthoot Finance has done reasonably well. It's almost replicated the entire move for gold as a gold financier. But when you talk of silver moving up almost 100% in the last 6 odd months, Hindustan Zinc has not moved in that sense. So maybe that stock is due for that kind of a catch up. I would actually sense that even if silver moderates at current levels as a base asset class, I would still believe that Hindustan Zinc can keep on moving up higher because of the inertia effect the stock has been going through the last 6 odd months. Talking of other names, Interglobe Aviation, Keynes, etc., these stocks, Dixon, I think these stocks are indicative that the massive volatility, the downtrend for these stocks is now behind us, and we are now getting into a phase where these stocks should moderate. So I am not expecting a V-shaped recovery into many of these names, but the kind of sell-off these stocks had shown, the 5%, 4% kind of an average downtick, I think that is now behind us. We should now see these stocks consolidate for a substantial period of time.
And your picks therefore?
So Vedanta is the first one which I'd recommend. It's very obvious because the metal counters are the ones which are the strongest one. So I would pick out Vedanta as a short-term buy. Would look out for 575 as a near-term target for the stock price, and stop loss could be kept at 540. The second is about UPL. It's a very interesting chart. The stock confirming a triangular pennant formation breakout on the intraday charts and specifically on the hourly time frame. That I believe could be a very interesting prospect over the near term. So would look out for 788 as a target for UPL. Stop loss at 755.